Hi everyone, Natu is here, one of the directors at Wholistic Capital. And in this video, I'm going to make a quick one about why, systems thinking is really underrated and how to see things, as a whole, and why understanding a whole in the context in this video of raising from $1 million to $100 million dollars using the systems of lower middle market investment banking. It's really precious to see things as a whole, because the way that people come up in professions, in culture, in training, people aren't come up to see things as an entire system. And it's really amazing when you start to see things in this new way, because then you start to get results, you start to actually close deals, you start to get calls with centimillionaires and billionaires, and things start to happen. For me, I've applied some of these principles of seeing things as a system, rather than just looking at one individual part. And it's resulted in me actually getting on calls with people that are ready to deploy capital really quickly, and getting deals done. So, the way that this all happened is just seeing things from, so what is a system of capital raising? So the video, I guess, would go into what is a system of capital raising, what is it that we're systematizing, and why is it that the entire system is greater than the sum of its parts. So, generally, when a registered broker-dealer would engage a deal to raise some money, what they would do, they would say, hey, the first step is saying, we have to sign off on due diligence. Like, we have to have a chief compliance officer, somebody who is registered by a securities commission. This could be the Financial Conduct Authority in Europe. This could be the Securities Exchange Commission in the United States. This could be one of the Canadian Securities Administrators subdivisions, such as the Ontario Securities Commission, etc. in Canada. That's in the securities world. So, working with one of these people, and people are registered, and then there's a chief compliance officer, and then they sign off so that they say that they've given the authority for a particular deal to be sent to investors. So when this happens, there's some checks. It's just making sure that the deal makes sense, that there are no scary things, or all the questions are answered. And it's up for the person to do it. And so we kind of simulate this by making sure that, we give all of our projects the opportunity to have a deal review from our analysts, so that the projects that approach us, can get their holes poked, so that they're strong before they go to market. And a deal is the foundation. So that's just one piece in the pie, and people getting their deal funded. But the way that traditionalists see things is not the systems. They see things as linear. They see things as, everything is 100% about the financials, and they go extremely deep into financials, and then that's it. It's really unfortunate, because some people, they're very deep into the financials, they're very deep into all of that, but then it doesn't connect to how they'll get funded. Some people are very deep into their vision, deep into the future, deep into the pro forma, but then when it comes to the actual deal and the practicalities of how an investor, a lender, whatever, is going to actually put money into it, they have no clue how to actually proceed. So the deal and the data room and what is being sent to investors, that's the foundation. Because if somebody's putting millions of dollars into your deal, it's of utmost importance, and that foundation is there and is critical. However, it is not the entire puzzle, because if you build it, they won't always come. The next step is obviously, charting out the plan for distribution. So some people, they skip over having a strong deal, and they just focus on distribution. And some people are so far deep into distribution, they're a linear thinker. But understand that distribution is just part of the entire system. Because after the deal gets accepted in a traditional lower mid-market investment banking world by a chief compliance officer, then it will have to be distributed. And the way that it gets distributed is by understanding the mandates of particular investors, firms, private equity firms, investment firms, and so on. And so to understand all of those things, you have to be able to, chart out understand and draw from the data room, because that's a foundation. Because if you look at all the the details of the data room and it's, what deal is being, what the deal is, then you'll be able to actually resonate a great message with potential investors, lenders, family offices, firms, lenders, and everything. So then it's not just for that, planning it out, then it actually has to be executed. Because a lot of people in the banking sector are poor at this. Because it has to be executed and every single metric has to be tracked. Everything has to be reported on, because if you don't know your numbers, then you're going to fail. If you don't know, what's going on, how many people has been sent to, if you don't know how many people are reading it, if you don't know any of these things, then you're destined to, blame randomness for everything, blame like the government, blame coronavirus, blame everything except yourself, because really all you needed to do is track things, and if you don't, it's your fault. So the tracking is very important, and here's where the linear thinkers come. So the linear thinker, rather than the systems thinker, the linear thinker would say, yeah, what is the click-through rate, what is the call conversion rates, and all of that, all the call conversion rates. They'll obsess about those numbers, but without connecting to the whole. Because if you have, like for example, I'm running a Aeropolis Capital with some of my associates. We track everything. Like, if we pay like $1,000 to get a customer that pays $1,001, although it's not ideal, it still makes sense, even if the click-through rates is really is really low. So if I pay $1,000 to get a customer that pays $10,000 and my click-through rate is like 0.001, but I know that if I put that money in, I multiply my money by 10, then it makes sense in the context of the entire system. Similarly, if you're raising capital and you're seeing all these numbers, and then somebody who's just a linear thinker just looks at the click-through rate, but they don't understand that you're saving for like, I guess like $20, you're able to get investors to put in millions into your deal, or get on the phone with them to get valuable feedback for you to iterate your deal, and that's worth far more. And so my point is that you have to understand how everything fits into the system. And so getting all those numbers, click through it, everything, getting the strategy, investor mandates, and having a deal foundation with all the financial analysis done. And then the next step is obviously going onto tools and using their proprietary tools to grow and get more contacts. Some people, they only focus on doing this. Some people, they only focus on getting tools, getting all these flashy tools and everything. Some people, they exclusively focus on that. But what we do, we add that on top. And we only do it once there's like an established system that is working with using some of the basic methods that we work on with our associates with. We also have a team of virtual assistants and assistants to augment and improve some of the processes, but we only get into those, we only start using everything to the full potential once it's, there's momentum. And so that's what, a lot of people lack. They just go into that without understanding the data room, how low to mid-market investment banking works. What are the things that chief compliance officers, financial analysts, investors, and everything look for, and everything. So they skip all of that. So and then we just top everything off of the masterminds and everything. But that can be talked about in another video. But the point is that when you look at all of the pieces of the puzzle that comes in beginning the lower mid-market investment banking process. Most players, because they're trained to be employed by a big company, just focus on one of the pieces. They focus on the financials. They go really, really, really deep into the financials, but there's nothing when it comes to distribution. Or they may focus really deeply on the distribution, but they don't understand the financials. They may focus really deeply on strategy, but there's no understanding of how to delegate and build a system and report on all the numbers. And some people are really good at tracking numbers, but they track numbers without understanding how it fits within the return on investment and what money that an investor will probably put into the deal. And so with this, that's just a quick look at understanding the difference between somebody who sees things as its parts and somebody sees things as its whole. And my point at the end of the day is that when you understand all these capital raising pieces, some digital, some technology, some traditional, and some importance in financial, understand how everything, whether it's technology, whether it's software, whether it's strategy, whether it's tactics, whether they're numbers, whether it's arts. Understand how everything mashes into the whole system. And then when you use this, then you get to the point of raising from $1 to $100 million and just turning it into a bunch of processes that need to be followed. And with this, I thank you for watching this video. I think the link or the notes will be right here. I'm going to get the editor to put it up here. And with this, I thank you for watching this video, and I'll see you in the next one.